So in the previous video, I explained to you what cash in hand means and trading summary also means. Now in this video, I will put both of them into action. So you notice we've already started a shift if you're familiar with Venta POS because we don't have a start shift button and also we have a billing screen enabled. Now when you click on billing, this will open the billing screen where you can make sales to customers that walk into your shop. So if this is your shop, customers that walk into your shop go around, pick items, and then come to the cashier to make bills and pay for. This is the screen the cashier uses. So when you open the billing screen, you can select category to pick an item. That is just like the fastest way to go about this. We have three ways in adding an item to cart, which I explained in our tutorial series. One is to select an item from a list, that is to filter by category, and another option is to scan the barcode, and the third one is to search. But this video is supposed to show us the difference between cash in and trading summary. Okay, so a customer walks in and then make a purchase of breadcrumbs for, let's say, 10 cedis, 50 pesos, and then they are paying cash. So this customer pays the cash, and then that is it, the billing has been made. Okay, now you can print their invoice for them. Now when you exit the billing screen with this power off button, it takes you back to the dashboard. And when you see the dashboard, for today's sales, our graph has gone up a bit. Our sales trend has gone up comparing to other days. And also we have our cash in hand 10.50. We also have our trading summary 10.50. And this is valid in a sense that we've sold inventory worth 10 cedis 50 pesos, and we have a cash in hand of 10 cedis 50 pesos, right? Now let me just throw more light on the cash in hand. Cash in hand over here doesn't mean only cash. Okay, it means money you have, and this can also mean like mobile money transactions. So when we say cash in hand, don't interpret it as just cash only. This has to do with like money you've collected instantly from sales. It can be bank transfer, it can be Momo payment, it can also be cash payment, it can be payment by credit card. So as far as the money is in your domain, it doesn't have to be cash. As far as you have your hands on that money, we term it as cash you have on hand, because your bank account, you can access it. That is what we term as cash in hand. So we've made cash in hand 10.50. We've also made trading summary of 10.50. Okay, now let's go to the back office and make an invoice for a credit customer. Okay, so let's say I already have some credit customers, but let's say we go to sales invoice. All right, and then we look at this is a sales invoice and a customer has already made sales. So let's raise another sales invoice. You click on file and then you click on new over here. So this will open a new screen for you to create a sales invoice. Now when creating a sales invoice, there are a few things that you need to provide in the header, and the header decides how the document is being treated by the system. First of all, you can select the type of sales you are making. That is to say, either it's a direct sales or sales from a pro forma. And if you are new to inventory, a pro forma is like an estimate, okay, a quotation you've given to a customer that, look, you want to buy 1, 2, 3, 4 items. Like let's say you want to buy mango, tomato, banana. This is how much we sell each. And if you are buying mango, tomatoes, banana, it will cost you like X amount. So it's just like an invoice, but it is to actually project how much the customer will be paying for the actual goods. So that's why we call it pro forma. And then some people add invoice to it just to make it look like that. So raising a pro forma in Venta POS, you can raise a quotation. And I have done these videos in our previous series. That is why I don't see the reason to go from pro forma, because I want to make this faster. So if you are interested in understanding how sales transaction works from warehouse, from back office, okay, because the sales I showed you is from the cashier point, But if you want to make sales from the wholesales, the back office, and that is where you make use of pro forma and say invoicing. Now, why? Let me just also explain why someone would want to make this kind of transactions. Okay, if you have a wholesale buyer, you definitely sell to them at a different price, right? Maybe like 10% lesser than a walk-in customer, because they are also going to sell. That's like business to business transaction. You selling your wholesale product to another business is like business to business transaction, and that you also have to consider additional factors like the cost of transportation and other stuff. That is why you give like you give it at a reduced price. So let's say if you sell an item for 10 cedis to a walk-in customer into your shop, when another customer, a business, comes to buy from you and then goes to your warehouse or your wholesale, they should get it at a lesser price. Okay, so that is just assumption. Some people sell it at the same price, but we are just given that flexibility, and I will actually explain to you why we need a separate model, why it is even advised in any inventory system that you have a separate model for wholesales and then like people coming to pick your stuffs. So over here I select direct because I don't want to relate this to a pro forma, and then I'll select the location I'm making these sales from. So the location you are making sales from also is important because it decides two major things: the price it will use and also where it will be deducting the stock from. So in our POS, if you have like 10 locations, you have the flexibility to set price for each location depending on the geographical factor. Because when you are doing like a business, I think that is business strategy. Okay, one thing you have to understand is selling a product at different places goes at a different cost because of factors that includes but like not limited to the culture over there, the distance, the availability of raw materials. So like for instance, if you are selling this item to the same community where you have your raw materials and where your factory is, it will definitely be cheaper compared to selling it to a community where you have to drive a long distance to sell it. That is because there will be additional costs whilst transporting. Aside the raw materials, there will be additional costs whilst transporting it. And also maybe because you want to usher your product as a new product in that community, you might want to also reduce the price, even though there's an additional cost, because you want it to become a household product. So that is just by the way. So that is why we have given every business owner the opportunity to decide how much they want to sell a product at every location. Now, it's not compulsory to set a price for a location. That is why in previous videos about inventory and sales, we've done this detailed video, but I'm just explaining it here because I want you to have an understanding. Okay, that is why like we have a base product price. When you are creating a product, you are asked to put the retail price. Now, if for some reason you don't specify a price for the location, it actually takes like the base price of the product, and then that is how it handles like backfalling on like a base constant, which is like a base price. So now we select the market, and we also we select the location, and we also go ahead to select the customer. So which customer are we selling this product to? Now, if the customer doesn't exist, you can click the plus button to create a customer, or you just select from your list of customers. So when you select, it populates the customers. And this, is it taxable? Is this invoice taxable? Yes or no? By default, is yes. But this is the tricky part over here. Okay, just because you selected yes doesn't mean all items in the transaction will be taxed. So if you notice, sometimes if you're using Venta POS, you might make a bill containing 100 items at let's say 100 cedis, and let's say VAT is supposed to be like 20%, right? But you will notice that your tax is not up to like 20 cedis, right? And that is, you might be confused, but like why? It will be lesser than that. But let me explain to you. Okay, in retailing we have taxable and non-taxable items. Okay, so if you are selling, for instance, let's say a mango in Ghana, mango from farm, those items are not taxable because they are locally produced. Okay, But if you import mango from, let's say, America, like an imported mango, you pay tax on it, okay? So now let's say a customer comes to the shop, buy imported rice and vegetables, and it amounts to like X amount. Now, out of that X amount, there is amount that is taxable, and there is an amount that is not taxable. So our POS actually separates them and apply the tax based on items that are supposed to be taxable. So that is where you will notice that your tax wouldn't match the total amount. But we in our invoices and reports, we actually separate them for you to understand. We put a non-taxable amount first, we put taxable amount first, and then we put the tax amount on the taxable amount, then we make the total. You should also understand that our system is flexible, that you can decide to say your tax calculation is either inclusive or exclusive. And when a tax is inclusive, it means if you're selling an item 100 cedis, the tax is part of the 100 cedis. So you will have to strip backwards to get your amount without tax. If you also, and the tax inclusion, that's like the tax inclusion. The tax exclusion is if you're selling an item 100 cedis, this is now when the customer picks it. You would then tell them, look, the item you have picked is 100 cedis, but the tax on it is 20 cedis. So you pay 120 cedis. And then in Ghana retailing, that exclusion doesn't work. It mostly works in people that makes like bigger deals, and it comes with like maybe tax clearing certificate where they come and buy like let's say 10 cars, and they tell you they have tax clearance from the government. So even it's excluding tax, they're just excluding tax, they're just paying what. So that is how it works, okay? So if you select yes, it's okay, it applies, and then you put just a remark. So let's say purchase sales of goods. So you just have to put a remark that will help you identify why this transaction happened, okay? So maybe when they came, fight happened, or like maybe argument happened. So let's say on the day Ghana played Panama or something, Panama. So like that's just like a remark to help you like give a comment on this document. Now you notice we have net amount, which is empty, tax amount, which is empty, cost amount, and then gross amount. Now all these are empty because these are auto calculated. So let's add an item to the cart. You click on search, and then you find the product. If you type the product name or barcode and you hit enter, it will bring out all the products in the list, okay? And it shows I think 10 products at a time for optimization. So you can keep typing, and you can select multiple items to add to the cart. So let's say I'm adding these 3 items. You select and then you click bulk add. It will add the items to your cart, and then after adding it to your cart, you notice that you have a place you can also change these prices. So that is what I'm telling you. There is a difference between that's what segregates the POS to the invoicing aspect. Because the POS aspect, the cashier has no right to change the price. So we don't even put that function there and even put like an authentication layer. No. You can only change prices when you are making back office invoices. And this is even subjected to what your company wants. When you go to your system settings, you can turn this off. And when you turn this off, no one can change price over here. You can only change quantity and packing. You can't change price. But if this is turned on, you can change the price. And we also have FOC here, which is like free of charge. So assuming this customer, they are buying like 1 carton and you feel like dashing them 2 cartons, you can specify it here. So you can also see that so far our invoice has 85.95. Tax amount is 0 because all these items are like fruits, ashgard, avocado, baby cucumber. They are locally made, and then the cost amount is 0, and then the gross amount is 85.95. Now assuming you are transporting it and you are taking money for your transport, you can put it here as your additional cost amount. But if everything is set, we click on save. Now if you click on save, this document doesn't automatically add to your today's value. Okay, let me just show you something. If you come to dashboard and you look at our trading, you look at our cash in and trading, it's still the same transaction we did from POS, okay? But if you notice over here, our chart has skyrocketed, right? Now because there is 85 added to this, and then it's giving us this amount. But that aside, let's focus on our cash in and trading summary. Now it's all showing the same amount because the invoice we made has not been processed. If it has not been processed, it means stock has not been deducted. That is why our trading summary is still the same. Now let's go back to our back office. Go back to our sales invoice. And then on our document, you just click process. So when you click process, it will ask you, are you sure you want to approve this document? Yes. So this document has been approved successfully. And then you notice over here is processed. And then when we go to our dashboard, trading summary is now high. And you notice that our trading summary is 96.45 and our cash in hand is 10.50. And this is because our trading summary actually included our sales we've made from back office. Even though payment has not been made, that is how much we've made in trading. That is how much we've made sending goods outside. So this is sitting logically. Now, let me show you how the invoicing amount also goes to cash in hand. So let me just show you something. You notice today, our cash in hand is 10.50, right? Now, if we go to back office again, and in back office, if we go to customer master, over here we have a list of our customers where we can navigate through. You notice this customer car sales, the balance we have to collect is 0. Now when we go to another customer, let's say cash customer, you notice this customer owes us a lot, right? Even today they owe us like 85.95. That is just the invoice we did. And you notice that they made only one payment. Now, assuming this, they owe us 6,911.45. Assuming today they say, oh, we want to make a payment of 1,000 cedis, okay? Today, we want to make a payment of 1,000 cedis. Now, if you come like over here to say make payment, and then this is the balance they owe, and then you enter an amount of, let's say, 1,000 cedis. What method are they paying? Cash, Momo, check, or others? As I told you, the method they are paying doesn't determine the cash we have in hand. As I explained earlier, if they are paying cash, Momo, or check, as far as the money is in our domain, it's money we have in hand. So even if they are paying in check, you can also wait for the check to clear before you do this entry, because that is what most accountants do. So let's say they are paying with cash, and then the reference, there's no reference, so we'll just say none. And then you click on pay. It will make payment to their account, and you notice they now owe 59411. Now when we go back to our dashboard, you notice that our cash in hand has been skyrocketed. Okay, it has been skyrocketed from 1,010.50 compared to our trading summary. So this is how we segregate this. So if you are reporting your today's sales, you actually report, assuming you want to see the money you've made today, you report on your cash in hand. But if you want to report on money you actually sold to customers that the transaction happened today, then you focus on trading summary.